Today on 5 Minutes of Finance, we're going to go over the loan estimate. Okay, at the very top, you'll see the name of the bank. In this case, it's Ficus Bank. It's fictitious. Right underneath, the title of the actual form, which is loan estimate. Date issued below that, and the applicant's name, which would be your name, in which case we have John A. and Mary B. and their address. Property address and the sales price. Now, off to the right of that, as you're looking at the form, it says loan term, which is typically 30 years, but sometimes people choose 15 years. The purpose, and then is it fixed rate, or it could be an ARM. What type of loan is it? Is it conventional, FHA, VA, right below that? And then loan ID. Every loan has a loan ID. It's almost like its serial number. Rate lock, at this point, when the LE has gone out, it may not be locked in. It varies for me. If the rates are super low, I'm going to hit them. But then we as loan officers have to hustle to make sure we don't have to extend that rate lock. That's why sometimes we push you to get that paperwork in. Right below that, there's a section called loan terms. Here is where it shows you the actual loan amount, because you may be purchasing the house for $500,000, but since you're putting down $100,000, the actual loan is only $400,000. This shows you your interest rate right below, the monthly principal and interest payment on that note, in this case, $761.78, looks more like a car note, especially in California. And then it shows you whether or not there's a prepayment penalty for you paying off this loan early, or if there's a balloon payment. Now, if you look right off to the side of these, right to the right, it says, can this amount increase after closing? And you see all those no's. Well, it says, hey, look, once you have been quoted this rate right here, that loan officer can't come back to you and say, hey, look, this has changed. Can't happen. Go right below that, and it says projected payments. And right under that, it shows you payment calculations. What it's showing you is that same number at the top, principal and interest. Years 1 through 7, it's $761.78, and years 8 through 30, same number. Let you know it's fixed. Is there any mortgage insurance? Is there any mortgage insurance? If there is, it's got to be shown here. And it says years 1 through 8, $82 in mortgage insurance. Underneath that, the estimated escrow. Some of you may want it impounded, included in your payment. Well, it shows here, $206. And then it shows your total estimated monthly payment of $1,050. Now, it does show you years 1 through 7, and then again years 8 through 30, $968. Estimated taxes and insurance, $206 a month, which is that same number above. Then it's broken down to the right. This estimate includes property taxes, homeowners insurance. Is it in escrow? In other words, is it impounded? And it says yes, out to the right of that. And then our very last area shows estimated cash to close. This is an area that gets people confused a lot of times because of the way it's worded. But it does show this person needs $16,054 to close this. If you look to the right where it says includes, it says $8,054 in closing costs. And in parentheses, it says $5,062 in loan costs and 0 lender credit. We've got to look on page 2, which we will get to next week, and we'll tie these in together. Gang, thank you for being here. 5 minutes of finance. We'll see you next Friday.